So here's the thing with IPOs that a lot of people are just very unfamiliar with. And I might as well just throw this out there. So Arthur was asking me right now. We're in the morning trading room, and Fitbit IPO, huge news. Everyone's talking about it. So right now, people will come in and they'll see, oh, it's up 52%. I should have bought. Why didn't I buy? That type of thing. Go ahead and tell me what you told me about the insiders, Arthur. Just a little tidbit, if you don't mind. Tidbit for Fitbit.
Insiders will get Fitbit IPO at 37 cents a share, and it's expected to open above 20.
Yeah, exactly. So the issue with IPOs is that the people who make the most money with IPOs, and you said insiders, it's people who created the company, created the product, were in the early stages. Those are the people who make insane amounts of money, right? GoPro, Twitter, Google. If you're an employee, that's how you make the money, because those are the quote unquote insiders. Those are the people who know about the company before it goes public. The people who work there. All right. People like you and me, who are sitting on the corner eating donuts, we don't get this opportunity very easily. The only way that you can trade an IPO before it opens is through your broker. And this is going to sound very, very weird, but this is just personally my opinion and kind of my experience. So maybe I'm just off the beaten path and I don't have a machete and there's trees all around me. I can't see anything. I have no idea where that analogy was going, but regardless, you have to call your broker. And in that situation, it's very Boiler Room-esque. If you guys have never seen the movie Boiler Room, I suggest it. Great trading movie. Has nothing to do with trading at all. Has everything to do with sales and manipulation, but that's okay. But anyway, Boiler Room. So it's like you're calling your broker and you're like, hey, when can you get me in? And they're like, all right, well, how much money you got? How many shares you got? And they got to go find some shares, because when a stock IPOs, and by the way, IPO stands for Initial Public Offering. What that means is, all right, so we have 1 million shares that we're going to sell to the public. So anytime a company IPOs, they literally have a certain amount of shares that they're willing to give away. Why? Because shares are ownership of a company. So 1 million is obviously small. It's more like 10 million or 100 million. But if you buy shares, you are literally owning ownership of that company. So they're not going to give out that many, because obviously the owners and the insiders and the employees, they already have some shares. When I say insiders, I really do mean people who are in the company. That's what insider trading is. So someone in the company knows something, they tell someone else something. Hey, dude, I just got this report from Doug, and Doug's like, we didn't sell one Fitbit all year. People think we sold 1 million. We didn't sell one. Our earnings are not going to be good, man. Go ahead and sell your shares now so you don't get destroyed, right? That's insider trading, which is illegal, thankfully. Very hard, actually, to track, unless you're a multimillionaire, but regardless, doesn't matter. So that's what they're doing. So their initial public offering is, how many shares do we want the public to buy from us? And the more that people want to buy, therefore the demand will increase. So all I'm trying to say is, if you feel like you've missed out on a 52% increase on Fitbit, don't feel that bad, because it's very, very difficult to get on an IPO lower than what it actually IPOs at, unless you have a little bit of a bankroll, because you're calling your broker and your broker's like, all right, how much money you got? How many shares do you want? I mean, we got to talk. You can't be like, I want 10 shares to kind of tiptoe. No. You got to do 1,000, 1,200, 1,500, 10,000 shares. Like you gotta have a little bit of a bankroll if you're gonna get in pre-IPO. But even if you're getting in at pre-IPO, the price is very speculative, right? It's more or less the broker speculating at which price it might open and selling you those shares for as a speculated price. So just kind of keep that in mind. That's why the majority of traders, real life traders, or traders who do this professionally, which are real life traders, or if you're Joe, Sam, Mike, Lisa, Tiffany, doesn't matter. If you want to get into an IPO, my personal opinion is always wait a few weeks or a month. Don't worry about missing out on the opportunity. The opportunities in the stock market always exist. They're always here. There are more money-making opportunities every single day than you can imagine. There are more opportunities every day than you can take advantage of in a lifetime. So let me just show you really quick what IPOs often do. Now, again, this is just my opinion, but this is what IPOs often do. They come out. So this is the part where GoDaddy IPO'd Huge IPO, right? People were buying shares. The initial public offering was down at $22 and opened at $26. $4, 20% return. People were flipping out, right? Well, most IPOs, no, not all of them, but again, just most of them, once they IPO, they usually sell off a little bit because there are some people that sell, people that do have shares that are able to sell. They do. But, sometimes you have what's called a lockout or a lockup, where owners or employees can't sell their shares at the initial public offering price. So for a certain time period, most employees can't even sell. So really, the selling comes in from the market trying to find people who are willing to buy. That's what the market's doing, right? So when the market comes out, the market will begin to drop the price looking for people willing to buy. Well, that's oftentimes what happens with IPOs. Then people begin to buy. Right, so then, usually about a month after the stock opens, it drops and it gives a little bit of opportunity to buy. That's exactly what happened on GoDaddy. And personally, I did not trade GoDaddy until just very recently. The 15th of June was the buying opportunity that I saw on GoDaddy. Right, stock broke out, came back down, retested a moving average. So it, buy low, sell high. So it made a higher move, pulled back, bounced, and then continued. So at this particular point in time, my target's $31.79 on GoDaddy. Let's look at another IPO, Etsy. Etsy, same exact thing. So notice Etsy, since it opened, what has it been doing? It's been selling. So my thought process on Etsy is I'm just waiting for some type of good bounce. This is a potential bottom. So I mentioned this earlier. Potential bottom right here in Etsy based on these candlesticks. But I'm watching this low, and I'm going to see if we do something like this. And if we start bouncing, then I'll look to buy. Twitter. So you guys, this IPO'd forever ago, and forever, just 2-3 years. But here's the Twitter IPO, and again, a lot of people felt like they missed out on Twitter, but here you guys go. Twitter, open, trade lower, bounce. So all I'm saying is a lot of these big IPOs, don't feel like you're missing the move. Don't worry, and most importantly, do not chase the trade. Don't chase a trade. If you have to ask yourself, am I chasing the trade? The answer is yes, you are chasing the trade. Take a stock, figure out what you want to do with it, write it down in advance. That's the only real way to do it. That's what professionals do. That's what real life traders do, is they create in advance what they want a stock to do. When the stock does it, they pull the trigger, they mitigate their risk, they trade their plan, and of course, they are a real life trader.